When debentures are issued at a premium or a discount, the profit, premium being the profit, the discount being the loss, is both immediately accounted for. But when there is a redemption and the redemption is at a premium, this is a loss which the company knows in advance. The company knows that 5 years from now the debentures have to be redeemed at a premium, which means 5 years from now there is going to be a loss on account of premium on redemption. So the company must make a provision for it at the time of issue itself. However, if redemption is at a discount, this is a discount which may arise in the future. It is a profit which may arise in the future. Discount on redemption of debentures, discount on redemption would be a profit. But this, if it arises, it would arise only in the future or would be realized only in the future. We follow the conservatism concept and provide for all losses if anticipated, but do not provide for anticipated profits. Profits are booked only when actually realized, only when actually earned. So what happens is, when we pass accounting entries for issue of debentures, we provide for loss on redemption, if any. Loss on redemption arises only due to premium on redemption of debentures. Let us look at the accounting entries with these principles in mind. First, if debentures are issued at par, the different scenarios here where the debentures are issued at par, the issue price is 100 and the redemption, however, one is at par, 2 is at a discount and 3 is at a premium. So debentures are issued at par, issued at 100, but they are redeemable either at par or at a discount or at a premium. What would be the accounting entries, considering that these terms of redemption are included in our terms of issue? For a quick understanding, let me just mention that the entries for issue of debentures is similar to an entry for issue of shares. Only if debentures are redeemed at a premium, there is an additional entry which is passed, that is loss on issue of debentures account debit to premium on redemption of debentures, to premium on redemption of debentures. The entries for issue of debentures is just the same as that for entry on issue of shares, except that instead of share capital we say debentures. And the only addition to those entries are that if the debentures are redeemable at a premium, we add to that entry loss on issue of debenture account debit to premium on redemption of debentures. With what? With the amount of premium on redemption. This loss on issue of debentures account which is debited is a capital loss account, and it is normally written off over the life of the debentures. The premium on redemption of debentures account, however, is a personal account. It is a personal account representing the account of the debenture holder to whom the premium is payable. So, premium on redemption of debentures is a personal account and it's shown on the liability side of the balance sheet. Other non-current liabilities. Loss, on the other hand, is a capital loss. It is shown as other non-current assets and it is written off over the life of the debentures. Now let us quickly look at the entries. When debentures are issued at par, redeemable at par, the entry is on issue is bank account debit, let's say 100 to debentures 100. What happens at the time of redemption? Debenture account debit to debenture holders to bank, the entire amount of 100. So it is simple. Bank account debit, debenture account is credited because it is a loan, it is a liability, it appears under long-term borrowings. It is usually a secured loan. If debentures are issued at par, but they are redeemable at a discount, this discount cannot be accounted for at the time of issue because the discount on redemption is a profit. This is a profit and we will account for this profit only when it is actually realized. So the entry here on issue is bank account debit to debentures 100. But when it comes to actually redeeming the debentures, we say debentures account debit 100. To bank we pay only 95 and to discount is 5. 5 rupees is the profit which can be transferred to profit and loss account. Let us now consider a case where the debentures are issued at par but they are redeemable at premium. Since it is issued at par, the entry is bank account debit 100 to debenture account 100. So bank account to debenture. In addition, we provide for the loss on redemption and therefore it is called loss on issue of debentures account debit. Loss, or sometimes they call this discount also, loss or discount on issue of debentures debit, amount being 5 to premium on redemption of debentures 5. Loss on issue of debentures, loss on issue of debentures, premium on redemption of debentures. Like I said, the loss on issue of debentures 5 is nothing but the loss which will arise at the time of redemption. It is being provided for now. It is written off over the life of the debentures and it appears under other non-current assets in the balance sheet. The premium on redemption of debentures, on the other hand, is the amount which is due to the debenture holder. It is a liability and shown under other non-current liabilities. What happens at the time of redemption? At the time of redemption, debenture account is debited with the face value 100. The premium on redemption account is debited with 5 and therefore this account gets closed. It gets cancelled and to bank 105. This is how the premium on redemption of debentures account gets closed. The loss on issue of debentures is written off or charged to the profits over the life of the debentures. What happens if the debentures are issued at a discount? The entry for issue of debenture at a discount is nothing but bank account debit, discount account debit to debenture. And this discount is a loss. Discount is a capital loss. In fact, it is treated in the same way as the loss on issue of debentures account. So normally the discount on issue of debentures and the loss on issue of debentures are treated in a similar manner together and only one account is opened. If debentures are issued at a discount of 95, redeemed at par, the entry on issue is bank account debit. We get only 95. Discount on issue of debentures is 5 and 2 debentures is credited with face value. And when they are repaid, debenture account debit is 100 with the face value to debenture holders and debenture holders to bank 100. So entry on issue is just entry on issue at discount is like an entry on issue for equity share. Now we have another case where it is issued at discount and this is redeemed also at a discount. The previous case was par. What happens now? Now again the money which comes in is 95. Discount or loss on issue of debentures is 5. To debentures is 100. This is because this 10 rupees discount which will arise at the time of redemption is a profit. It will be realized only when the debentures are redeemed. Following the conservatism concept, we will not consider future profit. We will not take that into account. We will ignore it till it is actually realized. I repeat, in practice, the debentures are rarely redeemed at a discount. On redemption, the entry would be debenture account debit with the face value. To bank, we would pay only 95 and therefore have a profit of 5, which is discount on redemption of debentures and which can be transferred to the profit and loss account. What happens if the debentures are issued at a discount but redeemed at a premium? If they are redeemed at a premium, this is called a loss on issue of debentures. Like we said before, whenever debentures are redeemable at a premium, since it is a loss which will arise in the future, we make a provision for it now. We debit loss on issue of debentures account debit to premium on redemption along with the normal issue entry. What is the normal issue entry? Bank account debit 95, discount on issue debit 5, to debentures would be 100. However, there is a premium on redemption of 5, which is a loss, and therefore we would pass another additional entry, loss on issue of debentures account debit 5 to premium on redemption 5. So premium on redemption 5 and discount or loss is one and same account. The accounting treatment is the same. Therefore, this becomes 5 plus 5, 10. Discount or loss on issue of debentures, only one account is open, and this in this case consists of both the loss, the discount on issue as well as the premium on redemption. Premium on redemption is a loss, capital loss. Discount on issue is also a capital loss. Both are clubbed together under one account called discount or loss on issue of debentures account. These may then be written off over the life of the debentures. On actual redemption, debenture account would be 100. Premium on redemption of debentures would be debited for 5 and we would pay the debenture holders 105. Therefore, in this way again, the premium on redemption of debentures account gets closed at the time of redemption. Let us consider when debentures are issued at a premium. In the first case, the debentures are issued at a premium. They are redeemed at par. Again, in the second instance, issued at a premium but redeemed at a discount. And in the third case, this is redeemed at a premium. We pass normal issue entry, and only if there is a premium on redemption which is a loss, we make provision for it. at the time of issue itself. So let us look at the entries. What is our entry? When debentures are issued at a premium, redeemed at par. Normal issue entry, bank account debit, the amount that comes in is 110. To debentures, debentures are always credited with the face value 100. To security premium, 10. The security premium is the same account that we have during the issue of equity shares. Security premium. When the debentures are redeemed, debenture account would be debited with the face value. To debenture holders to bank would be 100. If debentures are issued at a premium and they are redeemable at a discount, this discount on redemption is a profit. A 100 rupee debenture, for a 100 rupee debenture, the company will be paying only rupees 95. Since it is a profit, it will not be accounted for at the time of issue. It will be brought into the books only when it is actually realized, that is at the time of redemption of debentures. Therefore, an entry for issue is a normal issue entry. Bank account debit, the money comes in is 110. To debentures with the face value 100. To securities premium, it is 10. When the debentures are redeemed, however, debentures is debited with the face value 100. It's cancelled. To bank, we pay only 95 and the difference 5 is the profit, the discount on redemption of debentures, which may be taken to profit and loss account. Next, let us consider where the debentures are issued at a premium, that is a profit. This is a premium. This is a premium. In every case, securities premium is nothing but capital profit. So in this case also, what we have is a capital profit here and a capital loss here. So let us consider the normal entry for issue, like we have done before, is bank account debit 110. To debentures it is 100. To securities premium it is 10. In addition now, for this loss of 15, we have to pass an entry, discount or loss on issue of debentures account debit with 15 to premium on redemption of debentures 15. It may be noted, since this discount or loss on issue of debentures account, this is an item of capital loss and the securities premium is an item of capital profit, we may set off one against the other. Usually, therefore, in such a case, another entry is passed debiting security premium account debit 10 to loss on issue of debentures. That is, setting off the capital loss against the capital profit which arises in the same transaction. What happens at the time of redemption? Debentures are debited with the face value 100, but the amount that we pay is 115. The difference of 15 is the premium on redemption debit. With this, the premium account gets closed. So what is the entry here? Bank account debit 110 with the total amount received. Discount or loss on issue of debentures account with the premium on redemption. To debentures with the face value. To securities premium with the premium on issue. To premium on redemption of debentures, again credited with the premium payable on redemption. Since security premium is a capital profit and loss on issue of debentures is a capital loss, it is set off against another. So normally an additional entry is passed whereby securities premium is debited and the loss on issue of debentures credited with the lower amount. Thus, in conclusion, we may say that the accounting entries on issue of debentures are similar to the accounting entries for issue of shares. That is, bank account debit with the amount received to debentures if they are issued at par, bank account debit with the amount received to debentures with face value to security premium with the amount of premium on issue, or bank account debit with the amount received, say 95, discount on issue of debentures account debit 5 to debentures 100 with the face value in case the debentures are issued at a discount. These would be the entries if the debentures are redeemable at par and if the debentures are redeemable at a discount. The only variation comes when debentures are redeemable at a premium. In that case, in addition to these normal issues, and in addition to these normal entries, we pass an extra entry which is loss on issue of debentures account debit to premium on redemption of debentures. Loss is a capital loss account shown on the asset side of the balance sheet under other non-current assets. Premium on redemption of debentures account is a personal account representing the liability to the debenture holder, and it appears on the liability side, usually under other non-current liabilities.